So yesterday I talked about how I would do a video on some must-know candlestick formations. Okay, um, and we're going to talk about single candlesticks, and then maybe I'll show if I can try to find a couple um, multi-candlestick patterns that I think everybody should know. I mean, this is kind of the basics type video, but I know that when I started out, I didn't know that this type of stuff even existed, until um, either someone told me about it or I found out about it. So I know there's a lot of people who think they know everything, and I'll just be honest with you, you don't. I don't know everything, but everything that I do know, I will do my best to always do a video and do my best to introduce you in a very simple way to what these terms mean, and more importantly, what they look like. I never read a book on anything in terms of trading. Um, the best way to learn, honestly, is just looking at charts. For example, if you're wondering what um, the VIX does anytime the market goes higher, don't Google it. Don't ask somebody. Go look for yourself. Look at the VIX. When the VIX goes higher today, what did the market do? The VIX went higher for the first hour. Oops. Yep. The VIX went higher for the first hour of the day, and then it's gone higher for the last hour of the day. Now let's take a look what the market did. Well, look at this. The market sold off during the first hour and sold off during the last hour. So what does that mean? When the VIX goes higher, the S&P, the market, is going to go lower. Um, don't ever. I mean, it's okay to Google that type of stuff, but stuff like that, you can just go answer yourself by looking at a chart. So the chart doesn't lie. But we're going to talk about some must-know chart formations and candlestick patterns. Um, right now, we're going to look at Apple. I've been trading Apple a lot today. Okay. Um, we're going to go through, I think, the whole day of Apple, and we're going to talk about what signals I saw um, on Apple today. Okay. So the first signal I saw today was I saw a wide range bar. We're going to look at the 15-minute candle. I saw a wide range bar, red bar. This to me is a bearish signal. When you start the day where you have the open up here, right, and you go up higher just a little bit, but then you end up closing a few points down, um, and close pretty much at the lows of the candle, that's a pretty good indicator that there's a lot of selling pressure on the particular stock. Okay. Now, a few different things can happen when you have these wide range bars. Normally, you see a little bit of a retracement back, and that's what happened here. You can see that Apple, it did make a new low, but it did catch a little bit of a bounce, and try to retrace just a little bit part of this wide range bar. That's normally what happens. So if you ever see a big long bar like this, and you're wanting to get puts or something like that, wait for the bounce because it's probably going to bounce. All right. Um, so we had a wide range bar down, caught a little bit of a bounce. Now, this is not a signal to go long, right? Because we're still well off the highs on the day. This is just a little bit of a bounce. So this, to me, told me to stay bearish on the trade. The next candle, we had our 15-minute close. Remember, if you've watched my easy options trading strategy, if you have a 15-minute close underneath support, which is this line, that's a signal to get short, right? And we had the 15-minute close underneath that level. That gave you another trigger to get short. We had a little bit of a waiting period. This is a doji. When you have a doji, by the way, is where you have the open and close almost at the same level. Sometimes it can be literally at the same level. For example, I believe this candle here opened, oh, it's a penny difference, okay? But when you have a doji, it can be, it's a signal of market indecision, and that can lead to a potential bounce in the stock, or it can lead to more lows, or it can trade sideways. It's just a signal that the current trend that it's in is now done, and you got to see where it's going to go from there. In this particular case, we ended up going higher. Now, what we did do is we had a bullish engulfing candle, where a bullish engulfing candle is where you have the opening price lower than the previous closing price, and the closing price is higher than the previous opening price. That's a bullish engulfing candle. Where basically you have the open and closes here. If this candle fully engulfs the former open and close, that's a bullish engulfing candle. And normally when you have a bullish engulfing candle, that's followed by more green candles. And that's exactly what happened. We had more green candles. All right. Continue to rise up. It still couldn't make a full recovery past the opening. This still gave me a bearish indicator. Headed back lower again. We got yet another 15-minute close underneath the support line. This is another get short type situation. Continued lower. Here we had a, I believe this is called a dragonfly doji. And what this is where you have the stock opened. It went lower throughout the 15-minute period, but was able to regain all of the losses here and close relatively unchanged. This normally is a signal that either a bottom is in or a stronger bounce is coming. But anytime you have a doji, a dragonfly doji, any type of those, a gravestone doji, when you have those type of signals, you gotta treat it like a signal, not a recommendation to buy or sell, if that makes sense. You gotta always wait for commitment towards the move. And once we get down to the lower end of the chart, we'll get a good example of it. But here, you have the dragonfly doji here. If the next candle started higher, then this would be a very good signal that this level right here is the low of the day, and you can expect a higher move. But because of the next candle we continued to trend lower and made a new low of day, that means that this was not a very good indicator because it didn't work. It didn't show commitment. Now what we have here is we have one of my favorite trades. We have a price channel, okay, where you have two obvious support and resistance lines, and you have a couple different candles trading within the range, and what they're doing is they're channeling. It's an even battle. You have strong supporters here, and you got strong sellers here. Okay, now playing a price channel is probably the best way, in my opinion, to trade, because if you can recognize these type of levels, it's such an easy way to trade, in my opinion. And that's kind of what my 15-minute strategy is based off. Basically, to play a price channel, what you do, and by the way, a price channel can be on a 5-minute, 15-minute, a 60-minute, a daily, or a weekly. Okay. Same with all of these that I'm teaching you. They all can be on a 1-minute, 3-minute, 5-minute. It can be on any type, daily, doesn't matter. We're just going to look at a 15-minute chart because it's easy to read. But when you have a price channel, the way that you play it is you can do 3 different things. Okay? If you're trading options, you can buy calls at the low, at the support line, right? And then you would sell them at the resistance line. Or you can buy puts at the resistance line and sell them at the support line. And what your stop loss would be, let's say if you're buying calls down here, your stop loss would be a 15-minute close underneath the support line. That would be your stop loss. And your stop loss for your puts would be a 15-minute close above your resistance line. So for example, if you look at this candle here, if you're playing the price channel, right, and you had calls, and your stop loss is going to be a 15-minute close underneath support, this candle right here would have stopped you out because it closed underneath support, and then vice versa if you had puts. Now, if you're going to trade, those are the two ways you can trade it. Now, there's one other way. This is the best way to trade it. Is you wait for it to break out or break down from the channel. If it breaks out, then you buy calls, right? And you expect a follow through move higher, and then you sell a few candles later. Or if it breaks down, you buy puts and you sell a few candles later. And look what happened. This time it closed underneath support. That means that more lows were coming. This is a signal to buy puts. And look what happened to Apple. Apple went from 590 essentially, and it didn't really slow down until it hit 580. This is a great win right here. Okay. Now, typically on these type of things, I normally trade with a 3-bar rule, where whatever candle you're watching, let's say you trade purely off of 15-minute candles. The 3-bar rule would mean that on the 3rd bar, that's when you're selling, okay? Because typically you have, if you're going to have a continuation move, you're going to see 3 bars of movement in the same direction before you have either a pullback or bounce or some type of consolidation. And that's exactly what happened here. This would be bar 1. This is where we make the breakdown. This is bar 2. And this is bar 3. And look what happened on bar 3. It caught a little bit of a bounce, right? So this is where you'd be selling. That's with the 3-bar rule. Now I know I'm throwing a lot at you. Be taking notes if you can, or just rewatch the video. Wow, Apple, jeez, it cracked 580. Son of a gun. Hold on, I gotta check something. Oh, I am gonna cry. Remember how, I don't know if I said it or not, but I had 580 puts. I bought 20 contracts this morning. I bought them for 30 cents. Look at them. They're at just hit $1.65. Oh, that sucks. I sold on the way up. I made a lot of money. Had a great day off a $600 investment. But dang, I was calling all day for 580 crack. Talk on it. All right. Sorry. Back to the video. Let's see what happened. Okay, so now what we have here is we had an indecision candle because we had a pretty much, it was a matched meet between the bulls and the bears because it closed well off the highs and it also closed well off the lows. Here you always want to wait for the next candle to figure out what it's going to do. You know, it could potentially bounce here and ended up continuing to sell off, right? So then we had yet another continuation move. Now, continuation move is exactly what it sounds like. It's a continuation of the same trend, right? But you might see me on my watch list some nights say, you know, we're looking to buy this towards the close and sell into the morning continuation move, right? Where we're not necessarily playing the stock for like a gap, but we're playing it for it to continue the trend, if that makes sense. Now we kind of bottomed here, and we had yet another price channel. Apple is still trading, by the way. I don't know if you figured that out yet or not. We got a half hour to the close, but I'm done for the day. So we had another price channel. Now what's unique about this one versus the one over here is that this channel is much tighter. The open and closing are very, very tight in comparison to over here. Now what this normally signals is that we're bottoming out and that you can expect a bounce, right? And I'm teaching you all this stuff because I'm trying to show you or tell you what the odds kind of are. The odds here after a big down movement, the odds of it bouncing versus going lower are far greater, okay? So I know that Apple right now it looks like it's putting in the highest volume of the day, and it's trading at 579. But the odds of it bouncing here versus going lower is far superior. So, but we had a tight price channel. The proper way to play it though is you wait for the breakdown, and it looks like it's breaking down. So if you're currently trading it, you should be buying puts right now, and expect another 3-bar movement into the close, and we'll see what happens. But let's take a look at a 3-minute candle. Now we're going to talk about a bottoming tail and a topping tail. Okay? So first, a bottoming tail is something that you can find again on any type of time frame. Doesn't have to be just an intraday chart. It could show up on a daily chart as well. But a bottoming tail is essentially this, where you have a stock that's downtrending, okay? And then you have one candle where it opens, heads lower, but by the end of the candle's close, it closed well off the lows, okay? Now look at Apple, still selling off. I bet these things are at $2 now. Yep. Oh, that would have been sweet. Oh man. I'm sorry, I'm getting distracted. So with the bottoming tail, what you have is a stock that's downtrending, and then you see a candle like this where it heads lower, but then by the end of the candle, it's able to close well off the lows. Now, like the doji candle, it's very similar. This is another doji candle right here. Similar to this candle, it's a signal that a bounce or a reversal might be happening, but you always want to wait for continuation, okay? And if it doesn't continue the trend, then maybe give up on the trend, if that makes sense. But if you take a look at Apple, we had the bottoming tail put in, right? The next candle is green, so this gave you a good feeling that, okay, we're gonna potentially bounce. But on the following candle, we headed lower again. It never really gave you much of a clear direction, okay? But what did happen is right where this doji line was, this is where we kind of caught resistance, okay? It put in a couple green bars here before putting in a topping tail. Now the topping tail, this one did show more of a committed move to the lower side, as you can clearly see, because it continued the trend lower here. Now a bottoming tail, it would really only count if the stock was downtrending. So for example, this candle here, this looks very similar to the one over here, right? You might be going, okay, that might be a bottoming tail. Well, not really, because it's not really downtrending. It has 2 candles. This is a downtrend. We had multiple candles of down movements, okay? Same with like this. This isn't quite a downtrend. If we get a bottoming tail down here, after a long sustained movement to the downside, that would be more of a true bottoming tail. But But like on this, we had, you know, 5 or 6 bars to the upside before we put in a topping tail. This is probably a little more confirmed than something like this or like this. But if you ever see one of these type of candles after the stock is uptrending, if you look at this candle right here, if you ever see one of those candles after the stock is uptrending, that is like you can't get, or excuse me, after the stock is downtrending. This right here is perfect dragonfly doji. Right here, that's a dragonfly doji. The true one, it would look like a capital T. Like this looks like a lowercase t. The best one you can find is if it shows a capital T. Let's see if a 5-minute maybe shows it. Yeah, the 5-minute shows it a little bit better. If you can kind of look at that right here, almost a capital T. And the reverse of that, that'd be, pretty sure it's called a gravestone doji, where it's a capital T, but it's upside down, it's completely reversed. I think. Pretty sure that's what it's called. Let's go take a look at a daily. See, like on Apple on the daily, we've had a couple of these doji candles. We had one here that signaled a bounce. We had a bottoming tail right here that signaled another bounce. We had another doji that signaled a bounce. Had another one here that signaled a bounce. What I did want to talk about though, another thing is, so like we just talked about actual candle formations, or just straight up just candles, and kind of some buy and sell signals, I guess. But other thing I want to talk about is candle formations. So I'm going to pull up a chart because I know this one showed it really well. It's not going to do it. Okay, if you follow my watch list, you'll probably know the stock already. NEXS. We're going to talk about a bull flag. This is like a picture perfect bull flag. A bull flag is where you have a flagpole. I give up. A bull flag is where you have a flagpole. So this right here is the flagpole, right? And now a flag would be like a couple candles that are going downwards. That are essentially they're pulling back, okay? Because remember, when you have a wide range bar like this, you can expect it to pull back some, whether it's a bounce or a pullback. You know, if it's a green candle, it's going to be a pullback. If it's a red candle, it's going to be a bounce. But anytime you have a wide range bar like this, it's very rarely followed by another wide range bar. Okay, like this right here. This is 2 back-to-back wide range bars. This is not that often that it happens. Okay, but this is a bull flag, and what a bull flag is you have one giant green bar followed by a perfect one would be 3 red bars, and that's what happened here. And then the 4th bar, you can expect it to make another move higher, and that's exactly what happened. So we had the big move, we had a 3-day pullback, and then we had a giant move forward, right? That's a very good bull flag. I think Zero, Z-E-R-O, had a bull flag, if I remember right. It did. This one was a little bit different, though. It doesn't. So on a bull flag, it doesn't have to be just one up candle. It can be multiple. So like on this one, you have your flagpole with 3 bars. You had your 3-bar pullback, and then on the 4th candle, it continued to move higher. Okay. Here's another one. This one's very exaggerated, but this is a bull flag nonetheless. This is your flagpole. Notice how it's not vertical like that first one I showed you, but this is a very bullish pattern. Buying zero down here is actually a pretty good idea because it's probably going to rip higher again. Um, but you have your essentially your flagpole. You got to have a pretty good imagination, right? Flagpole. This is your flag. Flagpole, flag. Hopefully you can see that now. And what you need on these bull flags is you can either buy, on the lower end of the flag, or the best way to do it is you can wait for the breakout above the flag, and then it will probably make a new high. I bet zero by the end of November is going to be about $2. I might have this one on watch this weekend. Another candle formation I think everybody should know. On the bull flag, the opposite of that would be a bear flag, and that's where you would have a flagpole pointing down, followed by a 3-day bounce, and then more lows. If that makes sense. I don't recognize short patterns as well as I do long patterns, so I don't really see a bear flag on Apple's chart. Let's see if So Amazon, you could argue Amazon, this is a bear flag. You got your flag pull down, you got your couple day pull or couple day bounce, right? Today we're well off the highs. This is a topping tail, right? This is a topping tail right here. You could argue that this is kind of a bear flag, but like I said, I don't recognize short signals as well as I do long signals. Man, Apple's at 577. You've got to be kidding me. $3? Dang. Jeez. Okay. The last thing I'll talk about is an island reversal. And an island reversal is where you have a stock that's uptrending. We're going to pick Apple because Apple was uptrending. We'll do it like this. It's not going to show it as well. There we go. This will show it. Okay, Apple is uptrending. With an island top, what you have is you have a stock that essentially gaps up, which it did. Look at this big gap it had. Big gap up to above 700. You have a couple days of rest, and then you have a gap lower. And what this is it's called an island top, so you can imagine if it's putting in a top, that means that after the top you can expect a reversal. And look at this big pullback it's had since then. This is an awesome island top. This is another one right here. We had a gap up, couple day rest, gap down to fill the gap, and then it made a nice move lower to hit 655 or 657. That's another island top. Now, you can also have island bottoms, but I don't see, I'm not really sure, I know where one is to show you. Yeah, I don't really see one. I'm sorry. Nope. But you can have island bottoms. It would be the same concept as an island top, but reversed. Okay, I think I've rambled on as much as I possibly could. I probably should have wrote down these things before I started the video, but I think we covered enough that should help a lot of people. So if you yet to visit my website, thestockgarage.com, I strongly urge you to thestockgarage.com. Every night I post a watch list that includes stocks, penny stocks, big boards, options, everything, swing trades, and it's all free. I don't charge anything for it. It's setups that I'm looking at going in tomorrow. It doesn't mean I'm trading all of them, but it's stocks that I am watching, and if they give me the right setup, I will go ahead and trade it. So thank you for watching, and I will see you later.